Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. And what I'm going to do here is I'm going to look at, I've got technology in here. It's really, I threw in a couple other non-technology stocks like the Dow and stuff. And to me, looking at it from a chartist perspective on a unbiased looking at it, if I were to just look at the candlesticks, look at the momentum, look at how these things are setting up, I would say that technology and the Dow are coming under pressure. I still think they're rolling over to fall. And I think that commodities look absolutely fantastic on a long-term perspective. I'm not talking about the next month or week, and even though they may go up in the next week or months, on the big picture view, and that's what I want to get right, is that big picture view, I think that overall stock market, technology stocks, and the Dow are starting to look weak, and I'm going to show you what that looks like through the technical analysis that I'm doing. I could be wrong. And that's why this is only my financial opinion. It's not advice. But it looks like it's getting pretty weak. And I'm going to look at some of the leaders in the market in technology, and I'm going to look at some, the NASDAQ composite. So let's dive in. I'll show you what I'm looking at and what I'm seeing. So first I'm going to start with the 10-year. The 10-year prices all assets. Look at some of my other videos on why I think the 10-year prices all assets. It's basically a net present value calculation, a risk-free return in the treasury of the 10-year. And this is the yield that we're looking at. Yields going down, which we've seen here, is positive for stocks. Yields going up is positive for commodities and precious metals, is so long that we have real negative rates. Here we are going down. We've got this reversal pattern with the wick at the bottom here, and then the small kind of sell-off. This could reverse here and move on up for yields at any time now, unless there's something still in the system that's working itself off. Something like a little deflation scare or some other problem in the system. That's why people run to bonds, because usually when people run to bonds and yields go down, they're seeing something that's wrong in the system. And usually the banks and other large entities are the ones that are going to be buying bonds in mass, in greater and greater quantities, and rotating money out of stocks and commodities into bonds, because they know and see things that we may not see as retail investors. And they also control the Federal Reserve Bank, so they know if something's going to happen like a shutdown. And if they know that a shutdown is going to happen, they're going to all run into bonds first before everyone else, and we can see it through the 10-year yield. That's why I keep looking at this 10-year yield to see if it's continuing to decline or if it's going to go back higher. If yields go higher, the NASDAQ does not like that. Growth stocks with high PE multiples do not like higher interest rates, because when they do their net present value calculations, they're going to use a higher interest rate. And that usually manifests itself in a lower PE ratio. That means that the NASDAQ will sell off and go lower. That's what's seen in history, and that's what we're kind of seeing here. I'm looking for these large down candlesticks, and the up days are all small, but we've got large selling pressure in relationship to the buying pressure. I still think this could come under pressure and head lower. It depends on interest rates and where interest rates are going. I see a little bit of an ascending wedge happening in the Dow. I see massive sell-off, big candlestick selling pressure, smaller up day, sell-off, small little up days, bearish engulfing, sell-off, bullish engulfing, we came on up, another bearish engulfing with two large sell-off pressure days. And then the up days take many more up days to get back to these two big down days. So I know this sounds a lot, but I've been reading charts for a very long time. What I look for is how fast did this sell-off happen in how many days? 1-2 day punch down, and it took 1, 2, 3, 4, 5 to really come back, 4 or 5 days to come back to the top. The sellers, there's more selling pressure in this than buying pressure. I think this is going to eventually break to the downside. That's what I think. But it may take some sideways movement in time. Tesla, again, it's one of our leaders, is forming this large pattern. I'm looking in here, looking for it, and it looks pretty balanced. The buyers and sellers look kind of balanced in this tip. I don't see a clear direction here. I see selling pressure here, selling pressure, some buying pressure here, and we're kind of forcing, but I see a bearish engulfing candlestick with a wick at the bottom. Tough read here. I'd like to see which way this thing breaks. Usually what happens, it'll break to the upside because it entered from the upside. But we'll see what happens, because if interest rates go up, that's going to be a headwind for Tesla. Not a tailwind, a headwind. Now, Amazon, looking at Amazon, I'm trying to get a good view looking across the entire sector. I'm seeing bearish engulfings everywhere in this thing. Bearish engulfing, bearish engulfing, bearish engulfing, bearish engulfing, bearish engulfing. Every single move higher is being thwarted by a bearish engulfing, by a bunch of sellers trying to sell this thing off. And we got another bearish engulfing here recently. Is this going to go down? I don't know. I wouldn't be buying this. Based off of all this, I would be shorting it, but I'm not shorting it. I'm going to let it play out. But this looks like it wants to go lower. We are looking at this from a little bit bigger picture view. We've been moving on sideways. We kind of broke out a little bit above this kind of pattern here. And I'm still seeing all these bearish engulfings everywhere. I don't know if this is a legit breakout, but we'll see what happens. Give it some time. Again, interest rates moving higher is going to be a headwind for this, and we're seeing the dollar go lower. And typically what happens is the dollar lower is going to be putting pressure on yields to go higher, which puts pressure on the entire technology sector and these high growth stocks to go lower. So we're kind of seeing that in Apple. I'm seeing this bearish piercing, bearish engulfing, bearish move there. Then another bearish engulfing here recently. Bearish engulfing, they're bearish piercing, bearish engulfing and piercings everywhere. They're all mixed in here. I say this wants to go lower. Double top in Roku potentially. Come up, double top, and maybe we see this thing head lower. I'm curious to see which direction it goes. I'm looking at this from a bearish perspective. Here's the trade desk kind of zoomed in. You can kind of go this across. It did break to the upside here. So we should see a move higher, but this is massive sell-offs here. Although we could go higher, I think it's going to put in a double top and eventually sell off. Here it is looking at the big long-term picture. It did break this little downtrend here. We've been coming on up, but a lot of selling pressure in here. And I think that eventually this is going to peter out and probably do like a double top or something like that before heading lower. Something like that. And now, conversely, the opposite side of this is I wanted to show what is working. This is IBN, a company that I own. It's ICICI Bank in India. When the dollar comes under pressure, what we would see are banking and other countries, their stock market and currencies are going to go up in relationship to the dollar if we're seeing the dollar come under pressure, and if I think that yields are going to go higher for interest rates. We're seeing a breakout to the upside here, and this looks very positive. We have a bullish piercing here, that candlestick right there. The down days are really small. The up days are bigger. Notice that. Small little down days all sprinkled in here. They're not the big, huge sell-off types. We broke to the upside, and we've got some good movement heading on higher. I think this is going to continue higher, and I think it could go substantially higher. So this is one that if you want to diversify, you can look into IBN for a move higher. Here's HDB. This is another Indian bank, and it's been moving on higher even in the recovery phase. But this is going to be amplified as we move forward if we see dollar weakness, increased interest rates, and I think the currency is a good way to play this, is to go into other currencies than the dollar and go into their banking system or commodity type companies. So HDB looks good as well. But those are two Indian companies that I own. I'm kind of just holding on to them, letting them ride higher. I think they're going to do incredibly well for this next commodity bull market and dollar weakness. The tech stocks, I'm looking at it from a bearish paradigm, bearish perspective. Again, they are going to go up maybe a little bit longer. I'm not saying that this is just going to be, done. But if interest rates go up and the dollar goes down, it's going to be a headwind for technology stocks. Watch those things. and look at it from a bearish perspective instead of a bullish perspective, because it's going to be a headwind. And if interest rates continue to go higher, I know they're going down right now in the short term, but if they reverse and start going higher and they continue to go higher, I don't see a whole bunch of strength in technology right now. If interest rates are going down and I don't see the strength in technology, when this interest rate reverses higher, I'm willing to bet you're going to see a bunch of weakness. Right now, what I bet is happening, and I'm just going to throw this out as a bet. I bet the Federal Reserve is in there buying 10-year yields to push it lower. They're trying to fake the market. They're trying to get people to buy technology stocks and the Dow. They're trying to get people to go into the stock market so that they can offload their shares to you at very good prices and rotate into commodities. That's exactly what I think they're doing. I can see the commodities charts being very strong, and I'm seeing the technology charts get a little bit weaker. I guarantee that's probably what they're doing. I don't know how long this is going to last. It's usually it takes 6 months, year, 2 years for a top to really develop a big kind of top. So I think it's going to take some time, and you're going to see a big kind of long-term bottom in commodities as it comes on up. And again, we could have short-term pullbacks. We could have short-term moves on up. Look at the big picture. Don't be so focused in on the super short term. Don't focus in on that stuff because it's just noise. Look at the big picture view. Look at the big trend lines. We've had a big move up in the NASDAQ and down. It's kind of leveling off. And it may take some time up here to level off before it heads lower at some point. I don't know when that point is, but I'm seeing it get a little bit tired. The momentum's starting to slow down. We're getting these bearish candlesticks everywhere in these charts. So that's what I'm seeing. Give it some time. I'm not calling a top here. Well, kind of am, but tops take some time to develop. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already subscribed, and thank you for listening. This is Finding Value.